Welcome back to our series, World Economy in 2015. We have been speaking with Jim O'Neill, British economist and former chairman of Goldman Sachs. Jim, there are two kinds of views in crude. One, that it remains a bear market all through next year, and another, that it has fallen too much too fast. And so, a rebound is in order. What are your thoughts?
So, I'm going to caveat my answer by saying I wasted nearly 3.5 years of my life doing a PhD about oil prices 30 odd years ago, and all I learned was don't try and forecast oil prices. So that said, I've been following the topic for a long time. My guess, and this is somebody that did think for the past 3 years that we're going to go down to $80 a barrel, my guess is that this time next year oil prices will be higher than where they are at the time of our conversation, because I think that if they continue to drop, there's going to be negative supply side consequences in the shale industry in the United States. So I don't think prices will stay this low, but given the momentum we've got, I think we'll start off 2015 probably with further weakness.
You know, we in India will like to hear that. And on that note, actually, let me come to India. First, the inflation question. While retail inflation has fallen below, almost to 5%, and wholesale inflation is below 2%, there is a lurking base effect in these numbers, and inflation will surely move up in early 2015. So how are you looking at the Indian rate scene? Governor Rajan has hinted, almost assured the markets of a rate cut early next year. Is he being way too cagey, you think?
I think Rajan's done a pretty good job, to put it mildly, in his time as central bank governor. And it's very important that he tries to help lower and low inflation expectations become part of India's 1.2 billion people psychology. And so that probably makes him want to not rush to lower interest rates as soon as inflation starts to drop after 2 or 3 years of disappointingly high inflation. But that said, and particularly linked to what we were just talking about with oil prices, the environment is very benign externally for Indian inflation. So I would imagine if we've not had a rate cut by January, there'll be one coming soon after.
Okay, that's pretty much what Rajan has promised. But I want to know about how you see inflation panning out through 2015 in India. Some of it will, of course, depend on how global commodities pan out. Do you think the global inflation level is going to remain benign for Governor Rajan next year?
I mean, linked again to what we talked about earlier, I'd never want to take an existing trend in oil prices to be there forever. Just like with foreign exchange, the one thing you can guarantee, the prices will go up and down. But broadly speaking, compared with much of the past decade before the past year or so, the current environment for India from this external perspective is highly advantageous. You couldn't write a better script if you tried, really. So I think India's got a lot of positive headwinds coming from these kind of factors, which of course, if the Fed were to start raising interest rates, would be a very important positive offset.
All right, so benign commodities cycle continues. What about the still elusive India growth story? The last GDP number we got was 5.3%. It could be lower in the current quarter. Do you see growth picking up sharply in 2015? What's your GDP estimate if you have one?
I continue, as I have been now for a good 6 to 9 months, be pretty optimistic about the Indian economic cycle. And I would guess by the middle of next year, people are going to be talking 6% or higher rather than 5 or lower. Because you've got a lot of positive things in terms of leading indicators happening at the same time. Financial conditions for India are extremely stimulative. So it's a fantastic environment for investments, and it's an improving one with some rapidity for the Indian consumer as well. So I would be both really surprised and then with it somewhat concerned if it doesn't turn out to be that way by the second half of next year. But I can't imagine anything other than a notable acceleration of Indian growth next year.
Oh yes, of course, that's music to our ears, but very good growth can be a bit of a problem for those wanting rate cuts. You know, Governor Rajan wants inflation to fall from 8% to 6% to 4%. Won't very strong growth spoil this trend?
You know, I don't have a big view about this, I'm afraid to say, but I think the most important thing is what happens to inflation. And as I said earlier, I think you're certainly be getting a rate cut. It's sometime in the first quarter, or at least one. And as inflation drops more, and here's the key part why I'm not certain. If you also had the Indian rupee continuing to strengthen against the background of big capital inflows, I could see that in itself resulting in additional interest rate cuts, because in order for India to be competitive and boost industrial production, and particularly for manufacturing, it doesn't really want to have too strong appreciation of the rupee. In some ways that might be an important marginal influence, a bigger marginal influence next year than many people talk about.
You know, that's an interesting spin, Rajan wanting to cut rates to weaken the rupee. Well, for the moment I'm done with the growth and inflation questions. Let me come to what our viewers want to hear most. How do you see the Indian equity markets? The Sensex has risen over 35% this year, even without any green shoots of growth. So is another 10% or even 20% possible?
You know, I think despite how strong the rally has been, we could easily have another 10%. I think people are still worried about the nature of the Indian recovery, as evidenced, in fact, by your questions to me. And people aren't really re-rating India's structural outlook. And I wouldn't be surprised, I have no knowledge, but I wouldn't be surprised if in the build-up to his second budget, Modi talks about introducing bigger reforms than he did in his first. So I think the environment, obviously depending world conditions, is pretty benign and supportive of the Indian market rally continuing, even though it's been a huge rally this year, of course.
Oh, great. That's really nice to hear. Now let me end where I began, with the global markets. Ultimately, when the Fed hikes rates in 2015, will there be fresh tremors in the financial markets, or will it be the damp squib of the year?
You know, people have been talking about the Fed reversing monetary policy for the best part of 2 years. So you would think, so long as it would be modest, the ramifications wouldn't be that traumatic. But you never know. Again, having been around in the world of finance as long as I have, it is usually the case that when central banks raise rates, particularly in the US, the consequences are bigger than you think. And I guess at the end of the day, it'll depend on the language that associates the Fed starting to hike. If the Fed hikes and implies it's the beginning of many, then that probably would be resulting in a lot of turbulence. The Fed hikes and says, don't worry guys, it's a one-off, there won't be a lot more, then the markets will be pretty relaxed. And my guess right now is it's more likely to be the latter than the former.
Well, if that's how it turns out, looks like 2015 will be a better year than 2014, and we in India are not even complaining so much about the current year. Jim O'Neill, it was a pleasure speaking with you. Thank you very much for joining us, and that's it on this, the first edition of The World Economy in 2015. Thanks for watching.